If you're running a business in India and renting a commercial space, listen up. You might literally be paying your landlord's GST, and you probably don't even know it. There's a tax rule out there that could be costing you a ton of money. And today, we're going to break it all down, what it is, and exactly how you handle it.
So you've got your office, your shop, maybe a warehouse, you sign the lease, you pay the rent every month. You think that's it, right? Well, what if I told you a huge tax responsibility might be landing on your shoulders, not your landlord's?
Yep, there's a specific GST rule that, under the right or maybe wrong conditions, shifts the entire job of paying the goods and services tax on your rent directly over to you, the tenant. The biggest problem? So many businesses have absolutely no idea this is even a thing. Okay, let's get right into the heart of it. We're talking about something called the reverse charge mechanism, or RCM. Now, why does this even exist? Well, it's basically a tool the government uses to make sure they get their tax money. The idea is to shift the burden from smaller, maybe unregistered folks to bigger GST-registered businesses like yours. It completely flips the normal tax process upside down.
So what does that mean in simple terms? Normally, the person providing the service, in this case your landlord, would collect GST from you and then pay it to the government. But with RCM, if your landlord isn't registered for GST, the roles are, you guessed it, reversed. You, the registered business, have to calculate the GST on your own rent and pay it directly to the government yourself.
So the big question, when does this actually affect you? It's really simple. It only kicks in when 3 conditions are met. 1, you're renting a commercial property. 2, your landlord is not registered for GST. And 3, your business is registered for GST. If you can tick all 3 of those boxes, then boom, you are now on the hook for paying 18% GST on your rent. And trust me, this is not something you want to just ignore and hope it goes away. Because ignoring this rule doesn't just mean you owe the tax. Oh no. It means you are opening your business up to a whole waterfall of penalties and interest payments that can get incredibly expensive, incredibly fast. So just how bad is the financial damage we're talking about here? What's the real cost if you just don't do this? Let's actually break down the numbers.
Let's look at 2 businesses side by side. The compliant one pays the tax, sure, but then they immediately claim it all back as a credit. So their net cost? 0. Nothing. Now look at the non-compliant business. They still have to pay the tax eventually, but they lose the right to ever claim it back. And then the penalties start piling on. Interest, late fees, you name it. Just look at that number, over 1,82,000 rupees. Let that sink in for a second. That's the potential damage to your business after just 6 months of not knowing about this rule, or worse, ignoring it. It's a massive, and here's the key part, completely avoidable expense.
Okay, that was the bad news. I had to get it out of the way. But the good news is actually really good. Complying with this is super straightforward. And when you do it right, the net cost to your business is absolutely 0. Let's walk through how to make sure you pay nothing extra.
This is the most important thing to understand. This rule is about cash flow, not about cost. You pay the tax to the government, and then in a very same month, you claim that exact amount back as a credit. That credit can then be used to pay off other GST you owe, so it's just a temporary cash outlay, not a permanent loss. Let's make it real simple. Imagine your rent is 50,000 rupees a month. You calculate 18% of that, which is 9,000 rupees. You pay that 9 grand to the government. Then when you file your taxes for that month, you claim an input tax credit of 9,000 rupees. The net effect on your bank account? 0. And the process itself? It's just 5 easy steps. First, verify your landlord's GST status online. Second, calculate that 18% tax. Third, pay it by the 20th of the following month. Fourth, report it correctly in your GST return. And fifth, the best part, claim the whole amount right back as a credit. It's just a simple monthly loop.
Now, to make sure you're always covered in case of an audit, you need a solid paper trail. This means having your rent agreement, proof you paid the rent, your landlord's PAN details, and of course, all the records showing you paid the RCM and filed your returns. You know the drill. Good records are your best friend. All right, I'm sure you've got a few questions buzzing around your head right now, so let's just tackle some of the most common ones we get about this whole topic. Okay, here's a big one. People ask, hey, I've already got a bunch of input tax credits saved up. Can I just use that to pay off this RCM tax? And the answer to that is a hard no. This is a really important detail. The law is very clear. Any tax you owe under the reverse charge mechanism must be paid in cash. You can't use your existing credit balance. But don't forget, you get it right back as a new credit. Another great question comes from folks who are under the composition scheme. The rules are a bit different. So do they have to worry about this RCM on rent?
For businesses on the composition scheme, things have changed. For a little while, they were liable for this, but the good news is, as of early 2025, they are now completely excluded from this rule. So if you're a composition dealer today, you can breathe easy. This rule no longer applies to you. All right, we have covered the what, the why, and the how. Now, let's talk about what you need to do, like right now. Here's a simple, concrete action plan you can follow for the next 2 weeks. In the next day or two, find that rent agreement and check your landlord's GST status. After that, calculate any back taxes you might owe. Then, get that paid and file your returns to claim that credit. And finally, set up a system, a reminder, a process, so this just happens automatically every single month. And to make this whole thing painless going forward, just adopt a few simple habits. Set a calendar reminder. Maybe have your accountant give your filings a quick look. Keep your records straight. And hey, here's a pro tip. Whenever you can, just rent from a GST-registered landlord. That way, this whole RCM issue just disappears. So, at the end of the day, it really just boils down to this simple choice. On one side, you've got compliance. It's a temporary cash flow hiccup with a net cost of zero. On the other side, you've got non-compliance, which is a permanent financial loss that comes with penalties, headaches, and legal risks. The choice seems pretty obvious, right?
So I'm going to leave you with this one question. Is your rent agreement hiding a huge tax liability you didn't even know you had? Don't wait for a scary notice from the tax department to find out. The smartest thing you can do is check your landlord's GST status today.